Hey, what's up everyone? I'm Daniel Rondberg, and in this video, I'm going to talk to you about hybrid annuities. Now, this is really interesting because I read an article recently that said 73% of annuity owners are saving their annuity for in case they need long-term care. When you look at retirement, I truly believe, and this is from personal experience with clients, my grandmother, and just what I see in the landscape today, that long-term care is right up there with either the second most or really, really close to the second most significant retirement risk that retirees face. The first being running out of money. But think about how challenging planning for long-term care is, okay? You work and earn money for 30, 40 years, then you retire and you got to distribute what you have to yourself for the next 30 years without working. And then at the very end, you might have some of the largest expenses you've ever had in your life, needing the most amount of money most people have ever needed because of some type of long-term care event. Now, my grandma had an issue where she had a stroke and it was serious and she'd be rushed to the hospital. They encouraged family members to fly in. They were encouraged to say goodbye to her that night. And she ended up living, which was incredible, but she needed skilled nursing for the next 8 years of her life. Extremely expensive to be on skilled nursing. And that was almost 10 years ago from the time I was taping this video. She went through everything that her and my grandpa had saved, paying for her care for 8 years on skilled nursing. Now, long-term care grows, the costs grow by about 7% a year. So it's heavy inflation. At 7% a year, that means the costs literally double just about every 10 years. So that's why so many people are saving their annuities for long-term care. But what's interesting about that to me is an annuity by itself is generally not the most efficient vehicle to cover long-term care costs. Why? Well, it's tax deferred. So you could be building up taxes that you're gonna have to pay all at once if you cash out large portions. There could be surrender charges on your annuity. So you might have to pay taxes and surrender charges to get your own money when you need large lump sums. I think a lot of people will be disappointed in their agents and advisors when they need that money in the most vulnerable state of their life to find out, oh, I'm going to be penalized or I'm going to be having to pay a lot just to get my own money back. Now, some annuities offer guaranteed lifetime income streams. Some annuities offer long-term care enhancements or enhanced benefit riders for long-term care specifically from those lifetime income streams. And that can be one way that you can start to bridge that gap from what you need and what you're going to be charged for care. But now there's something called a hybrid annuity. And I'm going to get into a couple of these and they're really, really interesting. A hybrid annuity is an annuity, but it has tax-free long-term care benefits attached to it. So let me give you an example. Maybe you have $100,000 in your annuity today, and that annuity might pay out 6% for you as a lifetime income stream, okay? Now let's say it gets crazy and you got one of those riders and it'll double, it'll pay out 12% for long-term care for a period of time. That's pretty good. But a hybrid annuity might make your $100,000 of cash value in annuity look like $300,000 or $400,000 tax-free for long-term care, the benefit portion. Sometimes, in some cases, triple or quadruple your benefits instantly tax-free for care. Now, some of these have, just like with true long-term care policies, an elimination period or a waiting period. You might have to wait 90 days to receive your benefits. Some of them are indemnity benefits, meaning they're just going to pay you right away to use. Some of them are reimbursement benefits, meaning that you're going to have to pay for the cost of care and then they'll reimburse it. But either way, you can add substantial tax-free benefits to your annuity with a hybrid annuity. And that hybrid annuity you have to qualify for. Generally, with a phone call, the insurance company will actually call you to see if you're medically qualified to take out the policy. Sometimes you won't be qualified, and that may be an indicator that it's not right for you because you can't use it. But if you do qualify, you're able to add substantial tax-free benefits to your annuity that you don't currently have. So I always look at it like this. If I get 5 or 6% out of the annuity, maybe that'll double to 10 or 12%. Or I can go to this hybrid annuity and I could get out possibly as much as $4,000 a month tax-free. That's a huge difference in terms of what you're able to get for when you need it the most on a tax advantage basis because of the liquidity and because of the sheer amount. You know, if I had $100,000 and I could transfer it to a hybrid annuity, that hybrid annuity was $400,000 and the monthly benefit payment after 90 days was $4,000 a month. Well, $4,000 times 12, that's $48,000 a year. $48,000 a year coming from a original annuity that was deposited $100,000, that's an insanely high distribution. And that's what you'll really need to help combat long-term care if you don't have a plan or you have a shortfall in your plan. And so the hybrid annuity is really cool, but let me give you some really powerful things that these annuities can do that are just absolutely incredible. Let's talk about non-qualified and qualified. Now, this is like the most complex thing for people to understand, but it's really, really simple. Non-qualified, think after tax. Think your money, your cash, okay? That's yours. Qualified, this would be like your IRA, your 401k, your 403b. Pre-tax, it's not all your money. You can purchase these hybrid annuities in either form of account. The annuity is not the tax status. The annuity is the product. But the annuity can be bought with non-qualified after-tax money or qualified pre-tax money. Here's where it gets crazy. If you purchase it with qualified pre-tax money, some companies will have a tax-free benefit that comes out of that money. And some companies will even allow you to pay long-term care costs equal to the amount that's in that annuity from your initial purchase amount from some other source. And if you can prove to them that you paid it from some other source equal to what you have in your annuity that's your money, they'll let you go right to the tax-free benefit first. It's absolutely mind-blowing. Let me give you an example of that. Say you put $100,000 of an IRA into this annuity, and let's say your $100,000 is fully taxable, and then you have a $200,000 tax-free benefit on top of it. Well, let's say that you have other assets, or you have a long-term care policy, and you incur $100,000 of long-term care costs somewhere else. If you can show that to these companies, they'll let you bypass the taxable portion and just distribute the tax-free portion for the remainder of your care. It's absolutely incredible. Another amazing feature is with the non-qualified annuities. Now, these annuities are interesting because I said they're after tax, and that's true. But a non-qualified annuity is still tax deferred, meaning if you put $100,000 in, and it grew to $120,000, the $100,000 isn't taxable. That's your money, also known as your cost basis. The $20,000 above that is a taxable gain. Now, you're not paying it till you take it out. But if you need it for long-term care, boom, that's when you pay the tax. There are certain types of what's called pension protected annuities. These are certain types of hybrids, and they get a special tax privilege. You can do what's called a 1035 exchange from your first annuity with $120,000 to a pension protected annuity. And you'll get that same $200,000 of additional benefit tax-free for care. But as long as it comes out for care, the whole thing comes out income tax-free. Now, again, I'm not a CPA, okay? You have to go to your own CPA for tax advice, but that's how the products work. And it's absolutely incredible that you can have that ability to control your taxes to give you the most amount of money when you need it for long-term care. So my whole message is, if you're saving your annuity for long-term care, position it that way. Don't just leave it there and just hope for the best. Get the benefits that you can to really prepare for yourself and make sure you have a proactive plan. It's so sad. All the time I hear people say things like, well, my plan for long-term care is I'm gonna put a revolver in my mouth. It makes me so sad that that's where someone's gonna go to for long-term care. Now, I understand that people don't wanna suffer. They don't wanna have that low quality of life. They don't wanna think about sitting in a nursing home. I totally 100% empathize and get that. Some of my clients do end up in nursing homes, and I go visit them, and there's some that are really nice that I wouldn't mind being in at some point, even for me. And there's some that I don't even want to spend any time in there. That's just horrible conditions, and it's not good to be in those types of situations. Sometimes, I'll get a client that comes to me who's already in their 70s. They're already well into their retirement. They don't really have enough for long-term care, but I try to help them with the best I can with what they come to me with. And they're just going to need that type of care. And sometimes that ends up happening. We try to be as proactive as we can and do things like set up hybrid long-term care annuities or long-term care policies to protect them so they have the benefits they need when that time comes. But sometimes people start too late, and we still try to help those people. But I'm telling you that if you could avoid that scenario, it's important. And I get why people say that their plan is to end their life. What happens if you have a memory issue and then you don't remember to execute your plan and you end up in a situation? Wouldn't you want to have choices and control and get to that stage of your life with dignity? And so a hybrid annuity can really solve that and add the benefits you need to your annuity to protect you. So if you like this video and you like the content, you want to learn more about hybrid annuities, give me a thumbs up and a like, please. Share this video so I can increase my message and share it with more people. And please think about subscribing. Hope you enjoy the video, and I'll see you in the next one.